Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. John, the Taiga gold spin-out from the Eagle Plains made its debut today on the Canadian Stock Exchange. Are Eagle Plains shareholders celebrating that?
Well, they certainly do not have reason to celebrate today. The last day you could buy the stock was April 10th when Eagle Plains was trading in the 24 to 28 cent range. On the 11th, when the spin-out happened, you basically got a half share of Taiga Gold for each Eagle Plains share. The stock dropped down to about 19 cents, and today it's sitting at sort of 14, 15 cents. And Taiga itself, had a pretty good opening at 20 cents, but it's now since then dropped to 13 cents, which means on a round-trip basis, if you bought Eagle Plains a few weeks ago at 26 cents, you now have the equivalent of 21 cents. So not exactly something to celebrate. The arbitrageurs are probably disappointed, the ones who hope to pound out the stock and make a quick buck. Well, they're going to have to be patient. Now, the company has 56 million shares issued. 20% of that is still owned by Eagle Plains. They have only about $300,000 working capital left, but SSR Mining has just begun a two-stage 18,000-meter drill program on the Fisher project, which is a big land position to the southeast of the CD mine, where they hope to find an awful lot of high-grade gold mineralization to feed the CD mill that they acquired a couple years ago when they took out Claude Resources. At this point, there is no discovery. It'll probably be June before we get any updates from SSR as to what they did or didn't hit. They're drilling structures, looking for high-grade veins. And at a 20% net interest, which is what Taiga Gold ends up, at the 13-cent price with 56 million shares, the market's already assigning a $36 million speculative value to the project. So that's pretty good for what is an early stage exploration play. So until we get news that they're actually dinging high-grade intervals, the stock will probably be in this 10 to 20 cent range, while those with the longer-term vision accumulated and those who are, the quick buck arbitrageurs exit. What does disappoint me is how far Eagle Plains has fallen back. They only spun out 5 properties to the southeast of the CD mine in northern Saskatchewan. They still have all their other projects. They still have at least $2.5 million working capital, and they're about to start a drilling program on the Silver Range project, which is about 70 kilometers southwest of the Sullivan mine in southeastern British Columbia. And they think that the Silver Range project has potential for similar CDEX deposits and as well as IOCG deposits. The project thought it had a discovery back in 2010 when another junior called Providence Capital was the farm-in partner, and it intersected some good mineralization that got everybody excited. In fact, it took Providence to a couple bucks, but the Talon Zone drilling around it never really delivered a discovery zone, and Providence eventually dropped out, changed its name to Desert Star, attempted something in Arizona in the copper world that didn't quite work out, and then eventually reorganized itself as Cucho Copper Corp, which acquired the Cucho Creek deposit, which is a polymetallic VMS deposit about 100 clicks east of Dease Lake in northern British Columbia. So Eagle Plains ended up with 100%. They're supposed to be a farm-out, never drill the project company, but they've decided that after relogging all the core, doing additional IP surveys, they think that the Talon Zone is not limited out, that there are additional targets nearby. So they're going to do a 3-hole drilling program to get some more information to see if they can build a story out of this. So this is coming up for Eagle Plains. It's a project to keep your eye on. There's already lots of smoke in this area, and whenever a prospect generator that has survived a long time without a rollback wants to drill their own property with their own nickel, that's when one should pay attention, because they usually don't do that unless they have a very strong geological reason to do so. As for the weakness, gold has so far tried but been unsuccessful to break through 1,300, and that's kind of a big pall hanging over the market. And we do have the sell in May and go away psychology, which this year it would have been like sell last year and go away. Would have been the best strategy given how lame the resource sector has been this week. So generally bearish market mood. This is the kind of market where you actually look at these types of discovery exploration juniors. Their valuations are low. The glass is worse than half empty. And so the upside is much more dramatic if they do deliver something interesting in a general market wasteland.
We'll have more with John Kaiser right after the break.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with John Kaiser. John, Novo Resources Corporation provided an update for its Comet Well project. Did it deliver the news the market wants to hear?
Unfortunately, the market wants to see grade. And the news that Novo gave, well, they gave us a photograph of 80 gold nuggets that they've recovered from about 7 tons of material from the Comet Well project, ranging from 3 millimeters in width to about 20 millimeters in width. So yes, clearly this conglomerate unit on the Comet Well project is yielding nuggets. The company has pointed out that we're achieving these nuggets from a greater vertical extent than at Purdy's Reward, where they seem to be concentrated in the 40 centimeters, just under half a meter of conglomerate above the much older basement rock. Now, the fact that they didn't weigh these yet, but did put out this news release, is a bit disappointing, because embedded in the news release is the explanation that, contrary to Quinton Henney's predictions in March about how by mid-April we should have this new plant of SGS properly commissioned and be running lots of samples through and giving you grades, and hopefully by July be in a position to determine whether or not we have a geostatistical basis for creating a JORC compliant resource estimate, which is a significant issue in Australia, because you need to have a resource estimate in order to get a permit. You can't just start stripping the countryside and processing the rock and hope to get something out of it. What troubled me about the news release is that they collected 3 5-6 ton samples from Purdy's Reward, and this was all part of this idea that these 300 kilo samples that they had been processing through the Nagram facility just weren't large enough to give meaningful results. They were going to use at least one of those samples to commission the plant, and we haven't heard anything about what those 3 samples graded from Purdy's Reward. So that whole 50-50 JV with Artemis Resources seems to have completely fallen by the wayside. But what is kind of troubling is that it's taken this long to get this SGS facility to work properly. They have 18 samples already queued up, waiting to be processed, and they figure by the end of May they'll have the first few ready to report, and hopefully maybe we get the results from these this current sample before then, so that we get some sense of grade. Now you can eyeball this stuff, and I've kind of said, well, what if the average of these nuggets is somewhere between 1 to 2 grams each, and if the average is 1.5 grams for all 80, we have a grade of about a half ounce per ton for this material, which, if this is what this stuff is going to run, this will be really good news. But we do need to see multiple data points, because until we start seeing from this grid that they're drilling, where they drill the core holes first to delineate the geology and understand it, and then take a trench and take a big bulk sample of 5 to 7 tons, and then process it for the nugget gold content. We need to see that database start to build. Otherwise, we have this scenario of all you're ever reporting is the grade of the sample that you have processed, and obviously the cost of processing at this scale way exceeds the whatever $700 worth of nuggets in this rock, if it is half ounce per ton. So disappointing that we're going to have to wait several more months to find out what is happening. It is problematic for Novo Resources, because part of its big valuation is that it controls 10,000 square kilometers in the northern Pilbara, but what we're seeing here is continuing to work away at the edge of the Fortescue Wedge, and other companies are now doing that. Companies with considerably lower valuation, for example, a newcomer, NX Gold, picked up a piece of land not far from Comet Well, where they also have one of those slabs of Mount Roe basalt beneath which are popping out these conglomerates. All these other groups are now starting to do something similar. Novo needs to demonstrate that it can scale the discovery rate, that it isn't going to be sort of a backhoe plodding along doing these samples, that they can actually quantify that, hey, we have 7-9 kilometers of this stuff, we have all this land elsewhere, there is a systematic presence of this gold nugget content in this region, and we are the largest landholder, and we have a method now for measuring this, and we can start developing, turning this into a giant new gold field.
We'll have more with John Kaiser right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
We're chatting with John Kaiser. John, Scandium International announced a small $900,000 financing with an institutional investor last Monday, and the market was decidedly unimpressed. Cleantech Holdings has broken through $1 on the downside after raising $150 million at $115. Has the market decided that Scandium will not be the next big thing in the metals world?
Well, there's no reason for the market to take such a negative view on Scandium. Within the aluminum alloy world, there's a lot of buzz about Scandium and what it can do. I think there's two different problems affecting Scandium International and Cleantech Holdings. it's very impressive that Cleantech was able to raise $150 million through a share offering at $1.15 per share that was taken down primarily by institutional investors. And they, of course, are attracted primarily by the nickel cobalt, in particular the cobalt content of the Sunrise deposit. And the scandium is this longer-term spin-out. They claim to be able to possibly recover up to 80 tons of scandium a year as a byproduct. I don't think that's going to happen because they don't even bother reporting the scandium grade in the resource that's going to be processed for nickel cobalt, because the scandium grade tends to be lower where the nickel cobalt is higher. But maybe they have some sort of blending strategy. The stock has since dropped to 92 cents. The chart doesn't look particularly great. What's weighing on the Cleantech market is concern about the feasibility study, which was supposed to be here in the first quarter, got delayed into the second quarter. They have started to discover that there's additional components they need to add that's going to cost more money. For example, there's a problem with these chromite grains that do not dissolve in the HPAL autoclave. They stay in there, and this may be a problem for the resin and pulp ion exchange technology that they plan to use, inflict wear and tear on them faster than you would hope during the cycle when these little plastic beads absorb the scandium, nickel, and cobalt. So they have to figure out how to get the chromite out of the slurry so that these little missiles aren't in there abrading their beads. So what's hanging over the market is concern that the cost of developing Sunrise is going to be very, very substantial. And at the valuation that the company has with like 750 million shares, even the dollar, that's a $750 million valuation. The NPV is going to have to be substantial to support this, and it better be bigger than the capex. And so the big uncertainty with Sunrise is what is going to be the capex and what sort of metal price assumptions are required to make this work. At cobalt over $40 a pound, that is, it's probably going to work. But the question is, what is the long-term price for cobalt? In the case of Scandium International, the news should have been treated as significant by the market. It's the first time any institutional investor has visibly taken a position in the company. In this case, it's the Rothschild Asset Management out of Paris, which apparently spent the last 3 months doing due diligence and finally concluded, yes, this is good. They only put up $900,000. This gives the company enough money with the $1 million they raised largely from existing insiders in January probably to the end of the year to carry on with what they are doing. But the Scandium International shareholder base wants to see capex funding so that the scandium potential can become reality. They understand that the Sunrise project is probably not going to go back to primary scandium standalone development. They are going to stick with the larger scale scenario. And these two companies are the ones that have done the most advanced work of all the other juniors out there with a scandium deposit. So there's frustration in the market saying, well, why are we raising these little $1 million financings? Who cares if it's an institutional investor? But you do need an institutional investor in any big capex funding play because other institutions tend to follow the leading institutions that are in there already. Company did today put out another one of these letters of intent. This is with a UK outfit called Granger and Worrell, where they're going to spend the next 6 months playing with aluminum scandium master alloy that Scandium International is going to supply. They source all this scandium oxide from China, and then they make the master aluminum alloy. And these various groups, in this case, they specialize in air-set sand cast parts manufacturing for the automotive, aerospace industry. So they do custom projects. So this is a good thing because This type of company, if they like the material that they're working with, they can do a lot of these custom jobs down the road. It's part of SCY's ongoing strategy of developing many potential different future off-takers. There's no telling when any of them get serious and commit to, hey, I want to have my 5.8 tons guaranteed, and we'll step up and do an off-take deal. So the company hopefully will have something. One of these groups that they're dealing with will have come out of the shadows and done a deal, ideally with a big brand name that everybody recognizes. I've never heard of Granger and Worrell, but then I never heard of Grangees, which is the world's biggest heat exchange maker, where they did a similar letter of intent deal in January. But yeah, scandium's still going to be, in my view, the next hot metal. We have seen other little juniors start talking about finding scandium. Some of them are really dumb. One company actually was bragging about having 18 ppm scandium in its rock, and I said, well, that's lower than the dirt in my backyard. Crustal abundance is 21 ppm, and then others are coming up with some really insane numbers. There's one little company which has a big property now staked in Colombia, where they reported some very high grade numbers. Who knows what this all was based on? But more and more companies are starting to look at the scandium potential, because the feeling out there is, yes, if one of these juniors, be it Cleantech or Scandium International, demonstrates that the primary scalable scandium supply is possible, then there will be a lot of demand for scandium down the road. And the recent turbulence in the aluminum market, concern that aluminum may end up being higher, well, that actually doesn't hurt the scandium story, because the scandium was likely going to be priced at $2,000 a kilo, which is what SCY is proposing to its potential offtake partners. And that price is not going to change, because it's going to be linked to the cost of production. But if aluminum ends up higher, then the component, the portion that represents the cost of scandium, that ends up being a lower proportion. So a higher aluminum price is actually good for scandium, and obviously there aren't any great substitutes for aluminum, so a higher aluminum price is not going to have people substitute out of it and start using a much more expensive titanium or even steel.
Doesn't scandium make aluminum stronger? What's its connection?
Yes, what it does is by adding as low as 0.05% scandium to aluminum, it makes the material much stronger. That's why, for example, the military is looking at aluminum scandium armor plating, because they really don't want to be carrying steel plating around, because that's extra weight, but they want to be able to stop serious bullets from piercing through the material. So yes, it makes it stronger.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser, his website kaiserresearch.com. I'm Jim Godwin.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.